Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Visual JForex, we are going to continue our working with the stochastic indicator, which is a very well known, very well liked indicator in the trading community. It has been in the use for decades, and it has been also one of the simplest indicators for the traders to understand and put in use. We will see how we can take advantage of these indicator to design a simple and at the same time a fairly reliable and profitable trading system. So let's get us started. We are now going to head to the JForex platform where I had explained to you the logic, the kind of conditions which we can put in place for the execution of the trade when we are relying on the stochastic indicator to generate trading signals for us. There are some common pitfalls which we have to be aware. There are shortcomings in the stochastic indicator, as is the case with any other indicator too. No system is perfect. It is going to work sometimes, it is not going to work other times. So we need a filtering mechanism. No matter what indicator you are working with, you will always need filtering mechanisms to minimize the shortcomings to filter out the trade to the possible extent which you feel are simply noise and not a worthwhile signal to pursue. Some common pitfalls of using the stochastic I will explain to you here on this chart, which we are using with Euro USD as the underlying instrument with the candle period defined at hourly. Let me zoom in a bit on right here for the better visualization. Now you can notice one thing that the underlying instrument in this matter, the Euro USD, doesn't really move in any single direction all the time. It usually moves in a zigzag formation. That is the case with most of the financial instruments in the market. Most of the times you will see that these instruments tend to remain range bound with moves happening over time gradually with these zigzag formation. So it goes up, then goes down again, then goes up, and again goes down. Then you have to figure out what are the price levels and what is the general direction that we call trend to then predict, then anticipate the possible move. And in that context, we have to use the conditions which will weed out the possible false signals, because if you simply use a crossover structure of the stochastic, when slow K moves above or below the slow D, and that you can use as the trading signal. So here at 22 GMT of the 24th July, we have percent slow K below percent slow D, and then at 23rd GMT we have percent K above slow percent D. Now, if you were to rely on these signal generation with the crossover being your execution order, and then you will see that after a while it again crosses on the lower side. Now this time around you can go for a opposite trade. If you had gone for a buy trade when percent slow percent K crossed above slow percent D, if that was buy, you can go for a sell when percent K drops below percent D. But then the catch is not all the time these signals are going to be perfect, not all the time these signals are going to be right, and that is what we are witnessing here. Here the crossover happens, but this trade is not going to bring you much money in a very short span. Again, we have these move on the upside, but again, if you go for the buy here, as the percent K has gone up above percent T, here also you won't really be making much money. So this is the complexity of the system. Not all the trades generated by any given system are going to be profitable and worthwhile to pursue, and that is why you are going to need filtering mechanisms to weed out the noise to the extent possible. Now you can put in some simple conditions like using the trading system of stochastic only when it is overbought or oversold. So for that you can add conditions like the values being below 20 or above 80, and only after that the crossover should happen. Okay, that is also a good filtering mechanism. Here some of these trades will be filtered out. Now I will take you to another problem with this, because what happens is that if the underlying instrument is trending in a one direction, it is quite in a strong trend, and if that is the case, then you will say even after these crossover happening in oversold and overbought territory, you won't really see any big move in your direction. So for that you also have to get the trend right, and what you can do is also pay attention to the pricing price action mechanism, see what are the recent highs and recent lows, and the general trajectory of the price action needs to be considered as well. And we can define such conditions. These are some simple restrictions of the trading system which I suggested to you if you are working with the stochastic. Of course, you can always come up with newer restrictions, newer conditions as you think fit. So here I have listed two simple conditions which can, to a good extent, weed out the noise and give us valuable signals only. Not all the trades, even after these conditions have been put in place, are going to be profitable. That is never possible, but it will certainly help you in going for the strongly reliable trades, highly probable trades. That is what the intention is for us to create these filtering mechanisms. So now, if you have put in place this overbought oversold condition and then the price action condition of seeing where the current high is in respect of the prior high, we can, I think, define approximation of this trending system. Also, we need to incorporate the recent highs and recent lows to go with the flow. Now you have done this, but then if you have been using the Visual JForex, there are some other complexities also which need to be tackled, which need to be taken into consideration while defining and designing a system. Now we head to the Visual JForex platform where we will put in place a structure. So let me launch it. Here is the Visual JForex platform. There is a application of the Visual JForex, which is a standalone application. You can install it and run it on your system. I think I wrongly closed it. Alright, I will restart it again. Let me see. Okay, here it comes. Yes, here it is. I log in. My community account is Vaibhav27. Password, of course, I can't really share that with you. Now we are all set. And in these, the start points need to be defined first on candle, on tick, trade event. So whenever these initiation points are going to be defined, you need to see what is the trading system is all about and then generate these start points appropriately. The on candle start point initiates trade only when the new candle formation takes place. On tick is going to generate trade every single time there is new tick, and trade event start point is going to initiate the trade only when there is a well-defined, predefined trade event happening in the market, and these three are going to work differently from each other. To keep matters simple, I would like to use on candle as our start point this time around. So we put in place this first if else statement. We have to ensure that there is no existing trade with the same instrument with to avoid duplication of the trade. So we go and add this condition as our starting point. All right, now I will say that there should be no position, that is if the position amount is equal to 0, then only trade initiation should happen. Then another condition is going to be put in place, that the candle instrument should be the default instrument, needs to be the instrument of your choice. It can be anything. Now you are going to work with the Euro USD to keep matters simple. Let me find where is the Euro USD, else we can do a simple search, and here it comes. Alright, alright. Now we add another condition. Okay, the default instrument needs to be Euro USD. Okay, so these are the two basic conditions, and this third block is going to be helpful for defining next condition, which are going to be thought out as we progress, because even I haven't really thought about the whole structure before starting. We are going to work together here. You can put in your suggestions for these algorithm building, for the strategy building. If you have any idea, you can straight away write to me in the feedback, and I will try to incorporate that in the live stream. So the suggestion format is open to you as well. Now if we are going to work with this stochastic, and we have already discussed its pitfalls, its shortcomings, we will need to bring in the stochastic indicators visual blocks. These are going to be listed among the oscillator. This is a oscillator. It's not there. I think it is among the momentum indicator. Alright, here it is. We have to define these parameters. Okay, here it comes. For comparative purposes, we are going to need two of this, because if you are going to work with a crossover formation, then you need to compare the values of the stochastic %K and %D with the prior period stochastic values, and for that we are going to need two blocks. One is going to be the current output value for the stochastic indicator, and another is going to be one period back. So here I'm going to put in one, which is going to be one look back period. Alright, default instrument remains this. The candle period, I think we should work with hourly formation to make system fairly reliable and not generate too many trades while there is too much noise in the market. So hourly candle period is a fairly good candle period to work with in a short-term basis. %K and %D MA types can be defined. You can go with the simple moving average, you can go with another types of moving averages also. We will keep things simple with adopting SMA, that is simple moving average, as our choice. Alright, here we are. I will delete this as I am not really seeing any immediate use of that, and add this to close to each other. Alright, so here we have this. Now we have defined this, we can take these output values, slow K, slow D, and do a comparison. We also can add conditions like the output values need to be below 20 or above 80. So those can be done straight away. But there was one more condition I was talking about, that is regarding taking into the recent highs and recent lows into account. For that, I think maximum minima, which are mathematical functions, can be quite helpful. So I'm going to add that. Let us find out minima and maxima. Here it comes min max. Now with the min max formation, we also going to need to do the comparison. So two min max blocks are going to be needed. Okay. Zoom out a bit to connect this. So we have to define the input parameters, then we get output parameters. Alright, here we have added stochastic blocks and the min-max visual blocks, which we feel are going to be adequate for the defining of conditions. If anything else is needed, we will add it in course of time. Now let me zoom in a bit. So far so good, it looks alright to me. What we need to do is do a comparison and change this candle grid to hourly, because that is what we are using for the stochastic as well. Okay, here it is. Then we need to do the comparison, and for that using prior candle period is going to be helpful. And what amount of interval you need to put in place for the comparison, that is something which you will have to think about yourself. For the sake of simplicity, I think I will keep 12 as the candle definer. So that will simply take into account the highs and lows of last 12 hours. Of course, you can increase it if you feel like. You can go for 24, you can go for 48, you can go for 100. That is all up to you. Let me add this min-max indicator and get us a first-hand visualization of how things are going to be. Here, the min-max candle period, min-max calculation period is at 30, and this is what we are getting. This also looks decent. You can reduce it. Let us go with simple 24 hours, that is to represent price formation of full day. Okay, we will compare the current closing price of the min-max, whether it is high, whether it is low, with the high and low 24 hours back. We will get that comparative analysis. All right, so here the look back period is going to be 0 and 24, and for the time period also we are going to rely on 24. That is going to be the calculation period. Okay, now I feel we can add simple conditions for the execution. So we need the next logical block, multiple action, because we are going to put in condition for the buy as well as for the sell. I am going to join it to the multiple action, and here we'll create two sides, one going for a buy trade, one going for a sell trade. This, let me start defining the conditions for the execution of the buy trade first. Nothing special about choosing the buy side first. You can even implement the sell side first. I think I'm going to need a couple of these if else statements, so I will add a couple of these blocks straight away. Now we'll do the comparison of slow K, current slow K with prior slow K. So this and this. It should be higher. Now I think what we need to do is compare slow K with slow D and slow K14 with slow D14. Not do the cross comparison, but at the same time interval, same current candle period. Okay, so I think I got this wrong. I'm going to change it. Okay, so we have this defining of conditions. In the prior period, the slow K should be below slow D, and in the current period, slow K should be above slow D. Then we also need to define the condition that the output value of the slow K and slow D need to be below 20. That is also going to be, if we put in condition that slow K needs to be below 20, that will automatically translate to slow D being also below 20. Okay, so I am going to simply add this output parameter, input parameter of 20. Now we put this as the first condition. So this goes straight flow. Then in the prior candle period, slow K value should have been below slow D. We need first input less than second input. Then in the current period, it should have risen and gone above, so we need this first input less than second input, and with this we have defined the conditions related to the stochastic. Now what we need is do a comparison for the min-max value, and the buy trade should take place only when the recent minimum, that is the current minimum, is above the minimum value 24 hours back. We do this cross period comparison, minimum 16 and minimum 15. Okay, okay, should have been greater. And I think with this we are almost ready with the execution block. Open and market. If you feel that the conditions have been fulfilled and the trade needs to take place straight away, all you need to do is put in this command of open at market. Minimum should be greater. Here we have default instrument, default trade amount, which is at the lot size of 0.001 million. Default slippage is there, stop loss and take profit have been defined at 25 pips and 50 pips respectively. You can change it if you feel like, but this is simple formation. I will keep this thing simple and see no changes therein. We now need to define the sell side of the trading system. So for that, I'm going to add a couple of the if else statements. We needed 4 of these for buy, so we are going to need 4 of these for sell as well. 1, 2, 3, and 4. 4 of these have been added. Alright. Now, if you are going to open the trade on the sell side, you're also going to need the trade command block. So I'm going to get it this time itself. Open at market. Let me change it to the sell. Alright. Input parameters, output parameters. We need to define input, not the output. Let me now do the comparison for the stochastic. Whenever you are executing the sell, we have defined the simple trading condition that it should have been in the overbought territory, and then we are going to see if the crossover is happening currently or not. We need a percent slope K to have dropped below percent slope D in the current period, while in the prior period percent slope K was above the percent slope D. So we need this block over here. Then go for the crossover formation. Percent slope K should have been greater. Then in the current period it should drop below. With this we need less. So we have put in place the condition for the stochastic. Now we need to Go back to the comparison of the min max. Prior to that, we also need to define the condition for the percent slope curve, that it should be greater than 80, so as to ensure that the trades are going to happen only when the overbought situation has been reached. First input greater than second input, and then we also need to take into account the trend, the general trend. We don't really want to go against the trend when there is formation of higher highs happening. We don't really want to sell. We simply want to sell when the trend is downward trend is bearish, and we have this rally, and after recent rally there is these consolidation, some retracement, and now the market again looks like it's going to start declining. And that kind of equation we want the trade execution to happen. With this, we need the comparison of the maximums, max 15 and max 16. The maximum value, current maximum value, needs to be below the maximum value reached 24 hours back. Okay, here is the condition. Now we're going to connect this to the trade execution command block. Max needs to be less, and sell trade. Default instrument remains 0 USD. Trade amount remains at 0.001 million. Slippage remains default of 5 pips. Stop loss and take profit have been predefined with the default values of 25 pips and 50 pips respectively. So this is a simple formation, and I think it's at the same time is going to be fairly effective. And each trade initiation will happen whenever there is new candle formation taking place. So this is the strategy with stochastic, simple strategy. Of course, there can be some problems with the strategy, and which we are going to realize only after we have run it in the JForex platform on historical tester. So what we need is first to save the draft. We are going to name it stochastic with the date of its creation, stochastic 26/08/24. Alright, now we have this saved. Now let me export it in the Java format. Let me save it somewhere. Visual JForex, local disk C, users, not here, not here as well. Alright, here we have trade data, algorithms. I need to create a new folder, 2024 in it. I'm going to create another folder of 2024, but the month is August. Alright, now in the month of August we have this saved, and let me go back to the JForex platform. We are going to add this to the platform to see if we can run it. I think at my place it started to rain. Let me find that algorithm in the Windows this D trade data algorithm 2024 August. Here it is. Alright. So this is our simply created simple algorithm. Let me see how much line of code has been needed to write this in Java. It's somewhere close to 700 lines. This is a simple algorithm and I think it should be quite effective. Should be hopefully I'm saying that it should be working well. Of course, some unexpected errors, some unexpected problems can show up. To remove the confusion, I'm removing the prior strategies. So we are left with only the strategy which we have created in this session. Now we need to compile it first. So I have done the compilation. Compilation of Stochastic 2024 is successful. Now we need to see whether we can test it. I'm going to run a small test to look at the kind of trade execution which might happen. Visual mode, account. We're going to use this instrument, Euro USD, previous week ticks, and let us get started. I agree. Run. Run, boy, run. Let us see what happens. The kind of trades which we can generate using this simple algorithm. Alright, this historical test has started. To see if the trades are happening or not. Alright, the trade has happened. There was a buy trade. Oh my goodness, we had two trades happening. First, which ended in profit, then two trades next, which ended in loss. And by the end of the week, we had four trade executions with two ending in profit, two ending in loss. We started with the initial equity of $50,000 and the final equity was at $50,005, almost $5, because we were using the lot size which was quite small. We had only this $5 profit, but if you had gone for a bigger trade size, I'm quite hopeful that you would have made greater profit using this strategy, because in two trades which ended on a profitable side, we had this 50-50 pips profit, and in the two trades in which we suffered loss, we had 25-25 pips loss. So overall we lost 50 pips, but we gained 100 pips. So there was net gain of 50 pips over the week using this simple algorithm, and that is going to generate a healthy profit for the week. This is a simple formation. Some simple filtering mechanisms were put in place, but even after that you saw that the win-loss ratio is purely at 50. Now let me see the equity statement. Here it is. We started at $50,000, then it went up by $5, again it went up by $5, then it dropped by $2.50, again it dropped by $2.50, and after adjusting for the commission, the spread, we have this net gain. So this is how it would have looked like. And let me add the stochastic indicator to see when the execution happened. Here it is, this crossover is happening. trade execution. Then again this crossover, here is another trade execution, then there is this another trade execution, and here also another trade execution. 2 in profit, 2 in loss, 50-50 win loss ratio, but still with the risk reward ratio of 1:2, would have ended up making decent amount of money. So this is what I am talking about. You don't really need to be in front of the screen all the time. You need to create simple structures, simple algorithms, which you feel are going to be effective. You need to define the conditions and then let those algorithms run. Now, if we feel that this algorithm is quite good, you can go for the run. We can set it for the remote run or local run, and it will keep running on the remote server or local server as you have defined. Now I have chosen to run it on the remote server. So you will see that I don't need to be in front of the system from here onward. I have created this algorithm using the stochastic, and I feel it is going to be working quite well. So for the trial, I can keep it running over this week, over next couple of weeks, over next couple of months. And whenever I feel confident enough, I can run it for managing the equity, for managing our own money. Now it has started running. It is in a running state with the definition of these conditions. We have created an algorithm which can work 24 hours a day, and it is also going to be working objectively. I feel my objective of demonstrating to you a formation of a simple at the same time effective algorithm is done for the day. If you have any query or any idea to share, do write me in the feedback and I will be more than happy to take the discussion forward. Now it's time for me to sign off for the day. I will be back tomorrow with a very interesting information to work with. So come back, see you next time around. Till then, goodbye.